Welcome to the first Todd Talks video of 2025. And today I'm going to share with you a couple things. Number one, hope for the housing market. So what I can tell you is going into the new year, and it actually began after the election, we saw seasonally the purchase application index, which means the people that are beginning to apply for home loans, because what happens is the selling season is April to July, but the early indicator is who's applying for home loans. That was up about 20% year over year. So that means that people are feeling hope. We do have about 4 months of inventory, so you do have choices as buyers right now, including new home and existing homes, which we haven't had in a while. But demand is still very muted, so that makes it's a great opportunity to purchase if you're looking to make a move. Now, what's happened though is that I did my forecast and I said interest rates are going to be stubborn but slowly come down in a stair-step manner. And I want to revisit that a little bit today. I want to show you where interest rates are at, how you can track them on your own in an accurate manner, and how they're actually determined by the marketplace. So the first thing to understand is the Federal Reserve does not control mortgage interest rates. I could say that 1,000 times, and yet every single person in my database when the Federal Reserve cuts rates will call me. But they don't. They have an indirect impact, and depending on the commentary or the reason they cut, sometimes it's an adverse impact. Even though long term, when the Fed does cut long term, mortgage rates tend to follow as a trailing indicator. But right now, that's not what's happening. So let me show you what's happening with interest rates so you understand where they're at, and I'm going to tell you how I manage them to great impact for my clients. Okay, so the first thing is where you get information from. Most of you, if you go online and you'll shop around, what you're going to find is there's certain companies like LendingTree is one of them, for example, and there's other online sources where they are advertising artificially low rates without disclosing how they're getting there, or they're really just like a bait and switch. So the best one to go to is Mortgage News Daily. They have a daily rate index. There's a little button that shows how they do it, but they have a methodology on how they actually determine what the rates are that day, and they have a very detailed methodology. So I'm not going to read all of this to you, but at the end of the day, what they do actually works. So you can see the 30-year fix currently is at 7.17%. That's the current average rate. Now for VA and FHA, they're a little bit lower for the government loans, but for a conventional loan, that's where it's at. And now interestingly enough, this is back in May of 2024. You can see rates went down to almost 6%. We thought, okay, we're going to get to those low sixes earlier than we thought. And you know what happened right around here? The Federal Reserve cut their interest rates. Look what happened. Rates went way back up. Then the market started to calm down and rates started to drop again. We got down to 6.68, and then what they do? They cut interest rates again, and now look, they've been trending up. So that's what's been happening, and we can collaborate that as far as like the average. If you look at 7.17%, I'll just went and pulled up Rocket Mortgage just because they're the largest independent mortgage bank. We're an independent mortgage bank too, but our pricing is a little bit better than what's advertised out there. But I just wanted to show you. 7.1 was the average, and here it is 7.25 at 2 points. So that's what they're averaging. So now let me explain how it actually works. So mortgages are directly tied to the 10-year treasury. So the 10-year treasury and the yield on the 10-year treasury, historically, mortgage rates have been 1.75% higher than that. So I'm going to bring in a chart right now to show you. First, let me bring in CNBC, just bring in a news site. Give me a second, let me bring that in. I want to show you the chart. So you can see the 10-year treasury right now is at 6.669%. And I use this software right here. I'll bring this in as well. I'll use this software to actually track the movement of the mortgage-backed security market. And you can see as these candlesticks goes down, that's rates going up. As the price goes down, rates going up. And you can see they have it at 4.669 basically as well, the 10-year treasury down here. So that's where it's at. So now here is how it works. We're going to take the 7.175 or the 7.17 average minus 4.7. That's 2.47 points. So that's what's called the spread. So a spread is the difference, they're called basis points, but for the purpose of this, we'll just use percentages. The spread is the difference between the current price of the 10-year treasury and the current average mortgage rate. So you guys know when rates first shot up, when inflation spiked, the spread was 3.25, 325 basis points with 3.25. So last year, when the spreads were 3.25, rates would have been 8%. Okay, but the spreads have improved. The spreads have improved to about 2.5 to 2.5%. So that's why you're seeing the rates down at 7.17%. What I could tell you is I'm not going to change my forecast, but what we're going to see is rates elevated for a while this year. I do think later in the year, as new economic packages are passed, as we drive up energy production and we cut the cost of goods, we're going to start to see the price of everything come way down. And when we do that, we will see interest rates that's the plan, to drive the interest rates down. And it will work. It's worked in the past. It'll work this time too. And so we will see rates come down, but they're going to probably, like I said, stair step down. And that's sort of where we're at today. Now, the good news is that I can still get you a rate with a 5 on front of it or a 6 in front of it. 6 in all cases, in many cases 5, depending on the situation, because we can take seller concessions either from a builder or from an existing seller, get them, instead of a price reduction, to give us money, and we can structure a great financing package with a lower interest rate so you can enjoy that until rates drop. So you can still get a good rate. And the advantage of buying now, and I've been saying this all last year and it remains true right now, the advantage of buying now is you face less competition. What's happening in North Texas? We have a huge amount of pent-up demand. That means people sitting on the sidelines waiting for rates to drop. When rates do drop, and the magic number is when that average I showed you on Mortgage News Daily has a 5, even if it's 5.99, that's the psychological trigger point to really accelerate demand. And you will immediately see multiple offers because we only have a 4-month inventory out there. And there's no way that the builders can't build fast enough, and they build based on demand. I mentioned that before. Builders just don't go based on what the future might hold. They based on current demand. So there's a systemic shortage in the United States and in Texas as well. So take advantage of that if you're looking to make a move, and reach out to me and I will build you a great mortgage plan. If you're a real estate professional, connect me with your clients. I will help them with a great plan on how to move from point A to point B, whether they're a first-time home buyer or need a plan to sell and purchase a new home. Thanks so much, and hope you have a great day.